please sit next to somebody who has a question paper. Okay.
You're not sure. I'm bigger, I'm tall. You're bigger.
This is what I was saying. All right, guys. So as you know, we're revising 2021. I'll be meeting with the next group after this session, and we'll be revising the replacement test. That's if they come. That's if they come. What did I want to show you now? I wanted to show you quickly, for those of you who would like to consult. Why is this thing misbehaving now? For those of you who would like to consult, let's just duplicate this quickly. So today is literally probably the last day of doing revision. Okay, I don't have any more revision stuff to do with you guys. I have uploaded the assignment that you guys did. It is on YouTube if you guys haven't already noticed. We have revised your test, the original one at least, or the initial one. We have 19 and 2017. So yeah, okay, this is taking forever, but under more resources, if you look under more resources, let's do this. Okay, let's do this alone. This is my timetable for this week. Remember, past this week, you guys won't be able to see me. Okay. So yeah. Yeah, I'll be having classes. Okay, because past today actually, there won't really be a reason for us to meet in class per se. So I just want to use those sessions first, and I will be on campus the whole of this week. So even past those slots, I will obviously avail myself to see you guys if you have questions and things that you want to go over quickly before before I'm obviously on leave for the next like 3 weeks. And then 21st, 22nd, as you guys already know or should know, I will obviously also avail myself because you guys will be writing on the 20th. Okay. But anyway, so just sharing that here and now. But yeah, let's get into this revision. So I think let's actually start with question 6. Okay. And question 6 is your unit 7. Okay, we talked about a little earlier. Good that we are actually recording codes. In your paper actually. Okay. And unit 7 is a culmination of everything that we've learned in accounting 1. Okay. So inclusive of accounting 1A. Okay. And what's happening over there is this is more of a recap, because if you've seen the introduction to learning unit 7, which I did, I would imagine most of the time I do it with the introduction of learning unit 6. I spoke to the fact that in learning unit 7, you have a situation where you've got a business that's an informal business that obviously has not been keeping its accounting records. Okay. And then as such, they are asking for your assistance so that they can populate their financials as per, proper accounting standards. Okay. So someone might just be reporting their sales, recording the expenses, all right, but not recording the double entry effect. So we call that single entry, okay? So now I want to just take you to the slides so you then understand how you need to approach Unit 7 questions. Okay, so literally the steps are in here. Okay, so I'm not like going to re-lecture this. I'm just going to take you to the steps. Re-add those steps. So you see the title of it is Incomplete Records. Okay, so you take whatever information or data they've given you, and then you say, based on that information, how then do I actually then populate to the best of my ability the financials? Okay, so here you can see the following. Okay, no, we're not looking at disadvantages. We want the steps. Okay, single entry system. Steps to transforming a single entry system, okay, obviously into a double entry system. So step number 1, gather as much data as possible. Bank statements, check counterfoil receipts, and other source documents. Then determine the value of non-current assets from the available information. After that, you want to determine the fair value of inventory by means of stock take. Okay. Then step number 4, calculate OE, in other words, owner's equity. All right. At the beginning of the financial period, by deducting total liabilities from total assets as at the last date. Okay. Right. So that's the first 4 steps. Then the next few steps: prepare the cash book and post to the appropriate account. Guys, if you can get to step 5, you should be able to do this, okay? Because once you've managed to get all the source information that you've got off of the source documents, right, and then populate it in the cash book payments, cash book receipts, and then obviously go to the step number 6, determine the sales from the debtors control account and the purchases from the creditors control, okay? You determine those things, in other words, everything that would have gone into the journals. Then obviously you then would post to the appropriate accounts, in other words, now the ledgers, and then from the ledgers, obviously that would then spill over to the trial balance, and then from the trial balance, you can then do any statement because you have all the accounts and their respective amounts, okay? Make adjustments of the amounts still outstanding or paid in advance. That's adjustments. Literally all that we've done in Unit 4, Unit 4 is where we really had our adjustments. Unit 3 was just depreciation, but that's also an adjustment. Then draw up the trial balance, okay? So that would probably then be your post-closing trial balance. Can you see that? Because obviously you've already done the adjustments in step number 7. Then you draw up your income statement and your balance sheet for the period, okay? And we already know the structure of all our financials. So can you see how this is really a combination of everything we've already learned, okay? The only tricky bit is now to be able to decipher all the relevant information and then say, I need that, I need that, I need that too in order to do this. Once you've done that, then you can make your financial statement. Okay, so this process is not something you need to cram. It's something you should just know, okay, this is how I'm going to progress, how I'm going to do. So you need to practice it in order to get it right. But that said, I want us then to start with question 6. And question 6 is Unit 7 related question. Now, guys, we don't have much time. So you'll see, as you may have picked up, if you've already looked at some of the revision videos, you'll see that I've just literally been reading the question and then going to the suggested answers, because obviously for us to cover a whole 3-hour paper in 2 hours, and with your questions, because this is what this revision is all about, right? We won't get through. We won't get through. In fact, the theory side of things, I don't even bother to revise with you, because that's something you can just open your textbook, open my slide, and then see what's going on. But enough said, let's get into this. So what are they asking of us? Under the required, they say prepare the statement of profit and loss and other comprehensive income for Katlego General Dealers for the year ended 30 June 2021. Hint, use the debtors and creditors control accounts provided in your answer booklets to calculate the sales and purchases. Remember, sales is made up of cash sales and is also then made up of credit sales, okay? So the same thing with purchases, it's made up of your credit purchases, which would affect your creditors control, all right? And then also made out of cash purchases, okay? So that's all you need to be mindful of. That's what they're pretty much hinting you to. Then calculate the capital balance as at 30 June 2021. Okay. By now you should know the two different ways that we calculate capital. Either we would have to use the accounting equation where we say assets is equals to owner's equity minus liabilities, plus liabilities. Ooh, I should be fired for that. All right, plus liabilities, okay? So then we obviously just play around with the formula and we say assets minus liabilities is equals to owner's equity, which we know is the same as capital. That's the one way. Then the other way, we use the same structure or format of our statement of changes in equity, where we say, what is our opening balance on capital? What was then, did we have any additional capital contributions? Okay, rarely do they actually throw this in there, but I think I should tell you this because it could happen. Did we have any additional capital contributions? And then did we make a profit? Okay, we'd add that in. If we made a loss, we would deduct the loss. Okay, then we would deduct drawings, yes, close off drawings. Then obviously we now have our new capital balance at the end of the financial year. Additional contributions, then plus profit, assuming we made a profit. If we made a loss, it would be deduct the loss, and then we did say drawings, right? Yeah, when we minus drawings, and then you got your new capital balance. Okay. Right. Okay. So, which formula are you supposed to use to calculate your capital? It depends on the information you have. Okay. If you have assets and liabilities, then obviously that's what you're going to use. If you actually have the prior capital amount, all right, and you have the profit or loss, and you have the drawings, then obviously you'd use the other. Okay. Right. So let's see what they've given us here. All right. So question 6. Katleho owns a small business called Katleho General Dealers. She keeps her books using a single entry system. This is what we're talking about just now. But wants to change to a double entry system. Knowing that you are studying accounting, she has asked you for some advice. So here are the balances on 1 July. Remember, we're doing this for, let's see, when is our year end? It's 30 June, isn't it? Okay, so here we've got 1 July 2020. So this is the beginning of the financial year. Okay, these are the balances that we have. All right, sharp. Then we go to the next table. It says analysis of cash book revealed the following. Okay, so we received from debtors and cash sales. Okay, so this is basically showing us the cash sales and also the money we've received from credit sales. All right, because remember, for a debtor to come and pay me, it's because he owed me. So in other words, I sold to him prior. Does that make sense? So all of this would be included in our sales calculation. All right. Then here it says refund received from creditors in respect to overpayments. Okay, on accounts. Then capital contribution. All right. Then rent income. Okay. So like I said, the tricky bit about this is managing to navigate your way in terms of okay, I need to remember I need that rent income. I need to remember that I need this capital contribution when calculating your capital, etc, etc. So I'm begging you, please do practice those questions in Learning Unit 7 so you can develop your format. I'm not worried about your knowledge. I think you now know what to do in order to get what amounts. I think you know how to structure your financial statements. But it's now just about building that process to say, I'm moving from a single entry system to a double entry system. All right, because remember here, you've only got 3 hours. Okay, so you can't be trying to figure it out in the exam. Does that make sense? You need to come there and just prove that you know your story. Then here they've given us additional information. They said depreciation on equipment, 15% on cost using the straight line. Okay, they've also given us furniture and fittings, 5% on cost. Okay, straight line. All right, so at least that makes life easier. And we know depreciation is going to be in our income statement. Does that make sense? And if we're doing the balance sheet, we need also our accumulated depreciation in there. All right, cool. So already we're already deciphering and seeing what is relevant, what's important for us. Okay? Let me move on to the next bullet point. On 30 June 2021, there was no cash on hand except for what is in the bank. Okay? There was no cash on hand except for what is in the bank. All right, so that let us know there's no petty cash, there's no wada. It's only whatever we have in the bank. Okay, then we move on. They say 1,000 interest was collected on overdue debtors accounts. Okay, so this is obviously letting us know that we have interest. All right, for the debtors, interest received or interest received that needs to be recorded in the debtors control. Okay, the interest was not included in the opening debtors balance. Okay, so in other words, it must be recorded. Settlement discounts granted. All right, 3,600. Okay, settlement discounts received. All right, remember this is going to fall in your income statement under other income. All right, then the next, this is going to affect your creditors control. Settlement discounts received. Okay, it's going to reduce our creditors control. Okay, then debtors accounts written off as irrecoverable. So that's credit losses. You know that credit losses we included in our expense section under your income, your profit and loss statement. Right. And obviously that's going to affect your debtors as well. It's going to reduce your debtors. On 30 June 2021, inventory 75,000. Okay, so we now know at the end. So this is our closing inventory. All right, this is our closing because remember our year end is 30 June 2021. Does that make sense? Then debtors. This is our closing balance on our debtors. This is our closing balance on our creditors. Okay. So then now we then obviously need to say, okay, now all this information that I have, now let me try and populate. If you look here, these are our payments. Okay. Loan to bank, paid in full, etc. etc. I didn't see this earlier. We just ended on rent income. Okay. So anyway, that's all the information they've provided, and we obviously just work off of that. Okay. So now let's look at what you guys should come up with based off of that information. So here, remember the first bit. Let me do this. Then let me. Okay. Right. So, sorry, just give me a second. Let me just remove this for you before you. Okay. Yeah, you can share this on the group as well. Okay. But then obviously, if you're watching the video, which I will upload today, then obviously you can also just screenshot. All right. And then you can use that as a check when you're doing the assignment or the exam yourself. Right. So there you can see now how we calculated sales. You can then also see, you saw that they mentioned purchases. So immediately that they mentioned purchases, then you know I must be then on the the periodic inventory system. Okay. Right. And then there you can see your calculation on your cost of sales. Okay. Just remember there, if we may have carriage inwards, import tariffs, right? Those additional costs that we incur in order to get inventory ready for sale on the shelf. So under purchases, remember you need to add those in if you do have those. Okay. And then obviously you close off with closing inventory. Then now we come to our gross profit. Okay, we know it's the difference between cost of sales and revenue. Then we come to our other income there, like I told you, rent income. Can you see that? We've thrown that in there. Then obviously the interest received on debtors account, we've thrown that in there. All right. Then salaries and wages, telephone, and all these things, they we just need to extract from the information given. All right. Then what else? The depreciation. Remember, I spoke to you about depreciation. Fortunately, this is on straight line. All right. So we immediately just need to times and we get our answers. They didn't tell us that we only had it for 3 or 4 months, so we didn't appropriate a portion. Right? And there's your depreciation. All right. Then profit before cost. This is literally any interest that we need to pay, and then obviously we do the things that need to be done, and then so this is what I imagine you should have. Remember, these are my suggested answers. Suggested answers. So I'm not guaranteeing, but I would imagine that you should get at least 90%. I would imagine. Okay, so there's your debtors control, your creditors control. Okay, it's based off of the information that we have been given. Okay. All right. Then forgive me on the dates. I think when I was doing this, I just copied from previous exercises. Remember, you guys are doing for 30 June. So there I can see I used 1 July and 31 March and April. So yeah. Then remember the second part of this question, they want you to calculate your new capital balance. Okay. So here, with this question, I don't think they gave us the actual old capital balance, the opening capital balance. So I was just highlighting the formula that we spoke about just now in yellow. I was just making mention of it, right? Showing it to you. But the formula we actually used to answer the question was actually your assets minus your liabilities. Okay, what is highlighted in yellow? I mean green. Okay, so that's your question 6. Okay, so now you've gotten a bit of a feel of unit 7. Okay, so again, I'm gonna repeat. Please go and practice those questions. Okay, just because we didn't do it together, it doesn't mean it's not gonna come. In the past, I've seen they don't usually ask. They didn't usually ask it. But these days, like over the last 2 years, they have been asking. So do yourself a favor. Otherwise, look, yeah, no. Let me keep quiet. Because I'll say some things and then after December I don't have a job. So let me just keep quiet. Okay, so let's go to the next question. Next question. So I'm gonna work my way backwards. Work my way backwards. Okay. So let's go back to, let's see what question 5 is all about. See what question 5 is all about. So under the required, it says calculate the change in members' percentage or interest, okay? And members' funds for 1 January 2021. Open, post, and balance the appropriation account for the year ended 31 December 2021. Okay. Right. Super. So this is obviously a CC question. Okay. This is obviously a CC question. And I told you guys the appropriation account, whether you're on a partnership or on a CC, we use it the same way. Okay. So there's nothing brand new there. Okay, so this is the information that they've given us. Okay, yeah, cool. This is all the information that they've given us. They say, yeah, actually, let me just look at my things over here. CC was registered 1 January 2020. The following information applies to the CC. Names of members, okay, we've got them there. Interest, 10%, what? Contributions, we've got it there. And we've got now the retained earnings as well. Okay, super. Then we go on. Bullet points. On 1 January 2021, Diego joined the CC. Okay, he contributed in the form of cash 6,000. Okay, a 20% interest in the CC is acquired by him. So 20% in the CC. So in other words, 20% of the CC, not 20% of who, of Carlos's or Hugo's or Pablo's share. It's 20, a straight 20%. Does that make sense? So you want that type of scenario because it's more straightforward. Okay, right. But I'm just making you aware. We did speak about how they can also structure it. Net profit before tax for the year ended 31 December amounted to 175,000. Income tax for the year is calculated to be 49,000. Okay, we know we're going to use that in the appropriation account. Okay, the income tax. Then 75,000 of the profit after tax amount was distributed to members at year end. So here they're telling you how much we're actually distributing to members. So if we have any shortfall, that is going to then be retained earnings. Okay, but anyway, let's deal with this first part where Diego joined the CC. Okay, so all this information was at the beginning, 1 January 2020. All right, super. And he joined 1 Jan. Okay, so here you obviously just need to fill out your information. Okay, so remember, whenever somebody joins the CC, we haven't filled it out. So maybe you wanna, I want us to do this together because I want to show you, I want to show you guys that we've done this. This is now just application of what we've done. When a member joins the CC, how do we do? How does that affect the books? Obviously, the interest is going to change. What else? The retained earnings is going to change. Contributions is going to be affected by way of what they contributed, but we're not going to adjust the prior members' contribution. Okay? Right. So anyway, so I've already filled out here interest, the initial interest in the business, 10%, 40%, okay? And then each of the members, we said, has to give 20% of whatever they have in order to make up Diego's 20%. So here I've calculated that for you. In brackets, you can see there's that 2% from this person who has 10%, 8% from the person who has 40%. And then, so here obviously you're going to have 40, right? That's their new interest in the business. Here you're going to have 32. Is it making sense? Are we together? Okay. For some of you, it's just, it is boring us actually. Because you've been practicing, you've been knowing your story, okay? So then obviously, now we have that 20%. And if you add, sometimes you get a totals column. The totals column on the end here, where my cursor is, okay? This would then obviously lead to 100%, okay? All right. Then here, capital contributions, you can see, before Diego joined, here, this was the contributions, this was the retained earnings, and then this was obviously the totals. Okay, so we see the funds before. Now, somebody quickly calculate for me the total on retained earnings. What is the total on retained earnings? I want to know the total on retained earnings because we're going to need that. So here, Diego joins. Okay, so obviously now what that means, we know that Diego contributed 6,000, right? What does the question say? How much did he contribute in terms of 6,000, okay? And we know that contributions don't change. So here, this is still going to be 50,000. Okay. Here, this is going to be 22,000. Okay. And here, this is going to be 16,000. So can you see how they're testing you? Do you know that contributions doesn't change? The only thing that would change in that line is obviously that Diego is also contributing, right? But that's given to you, so it's a copy and paste, okay? Then, however, we know that retained earnings does change. So now we need to say, what is 20% of the retained earnings owned by Carlos? Yes. Yeah. I would advise just put them, because they might be a mark there. Because can you see how we're testing you? We're testing on, do you know that you shouldn't do anything to it? So they could potentially be a mark. So yeah, quickly calculate for me. If you can calculate 20% of 13,900, then since you guys like to talk too much, if you can calculate 20% of 57,400, and then the next one, 71. So, okay, 11,480. Thank you very much. The next one, 2,780. Okay, and then the last one, 350. Okay, super. All right, so now we have our amount. Then these amounts were obviously deducting from their prior retained earnings to find out what their new retained earnings is going to be. Okay, so how much are we going to have for Carlos? What is, sorry. Yes? $20,000? Sorry, let me see. 28. Oh, over here. If you add these, what do you get? Okay. And the reason why it's not in brackets, thank you for asking, is actually a brilliant question. I probably might have skipped it. Remember, we're taking this retained earnings from Carlos. He's paying it over to Diego. Same thing here. We're taking it from Hugo, and he's paying it over to Diego. Pablo, and over to Diego. Okay? So this is the retained earnings that he now has. Okay? So then we come here and we say, okay, this is the new, so I actually have calculated it for you. This is the new retained earnings that each of these partners has, okay? The member contributions over here is going to be the same, 6,000. Okay, so there might even be a half mark here, 16,000. And here, 22,000. And here you then have the 50,000. Okay, right? And then obviously the new fund balances, this is actually a title. It's not something you're not supposed to enter something there, just so you know. Okay, so it's a title for the things that come below it. Okay, then new total funds. Okay, so now this is your total funds is obviously your retained earnings and your contributions added together. Does that make sense? Together? Retained earnings and your contributions added together. All right. So that's what you needed to do to get how many marks? 21, guys. This is if you know math and you know what's going on, you know when. So let's quickly recap. When a new member joins, we know that your interest is going to change and your retained earnings is going to change. When a member resigns, your interest is going to change. We're going to share it amongst the members that remain. Okay? And then if you're doing one of those long questions where you actually need to write out all the transactions, then you're also going to take out, you're going to pay the retained earnings and contributions to this member that's left. That's the only thing that changes when a member resigns. Okay, the interest. Assuming you're doing a question like this. Does that make sense? Yes.
Yes, it's members contribution plus retained earnings.
Yes, it's these two added together. Same thing if you look there before Diego was admitted. The contributions, retained earnings, you add them together, you get those amounts. Okay. Right. And then what's the last scenario? There's another scenario. When there's an internal transfer between members. All right, when one member buys a certain portion of the other member. Okay. There you're going to get a transfer of, a change in interest, a change in retained earnings, a change in the contribution as well. Okay? Right. So that's the only scenario where all three actually changes or are affected. Okay. So that was 5.1. 5.2, we now have the appropriation account. Okay. So again, let's go back to the information that they gave us. Okay. This was it. Okay, so we used the first bullet point and we've used this information here. So net profit before tax, they've given it to us. We know that the appropriation account, this is just recap now, is used to actually calculate what are we paying to the members or the partners of the business. Does that make sense? So we open the account. When you're asking yourself, hey, I'm not doing the general ledger. I'm doing the general ledger. So we begin by profit and losses. You plug in your profit and losses. It was 175, okay? 500. You guys have the, is it 500 or 175 only? It's 100, okay, it's 175 only, 1,000, okay? Then we go to retained earnings, all right? What was the retained earnings? They didn't give it to us directly, but we did calculate the total of retained earnings in the previous section, right? Where we added each of the partners. Okay? So here you're going to, I just wanted to do it with you so you guys know. Here you're going to say 11,120. Okay? Then you're going to say 45, 920. And then here you're going to say 57. You're sleeping. And then here finally you're going to say 28. 6. Okay. Okay. Right? And so even if you had done it on based on the old retained earnings, you still would have gotten to the same total. Okay? because we didn't have any additional retained earnings. It was just really, yes, it was just really a reallocation. 143, how much? And 50. There you go. Right. So we have that now. Okay. And then obviously this side we had income tax. All right. And then we had, they told us distribution to members is 75%, 75,000. We know that sometimes they actually make us calculate what the distribution is going to be based on the ratios, based on maybe the ownership, etc, etc. Okay, right. In one of the past papers that we did this week or last week, but one of these past papers that we did, we actually did it based on the contributions. So that was something different, okay, than what we usually see. So then we ask ourselves, the total of 318,050, because we can obviously tell the credit side is greater than the debit side. Is it the same if we add those two amounts? There's obviously a shortfall. So whatever that shortfall is, we know that this is then going to retain earnings, because they've told us 75,000 is what's going to be distributed. So whatever else remains is then obviously retained, our closing retained earnings. Somebody please recalculate that. 124 only. There's no 50 there. I'm just thinking, because we got a 50 over there. All right. Okay. Anybody else got an answer for us? You got 194. Okay, 194. And are you getting the same thing? Just making noise. Making noise. So we all agree. We're happy. Okay, so that's what we needed to do over there. All right. All right. Awesome. And what? Okay. All right. So question 4, if anybody does not collect all the marks with this, what is this? This is partnerships. Especially this type of a question. I'm gonna take it personal and I'm gonna look for you. And then you must explain why you didn't get all the marks. So here, guys, let's literally just look at the question. I've already shown you pretty much what they've asked us pretty much. You can see from here. We'll come back to it, don't worry. We'll come back to it. So under the required, yes?
Is it possible, let's say like you see, I don't know what you used to do that thing, but is it possible for you to share it to someone?
No, I can't share. I can't share it with you guys. Because if I share it with you guys, firstly, though in previous years I was able to do that because it was online. This one now is based on this PC. It's strictly based on this PC because it's not online. At the end of last year or whatever, they cancelled our old email addresses. So all my stuff was actually attached to that email. So because that email no longer exists, I can't operate online. So I could have used any laptop. This is why I've been using this laptop over and above the fact that it's touch. So, it makes it easy for me to draw stuff for you guys. I could have then moved over to my other device. But because all my stuff is here, I was like, no, I'm not going to transfer this during the semester. Okay. But the reason why I don't share it with people, even if I was still online, is because then they can change things on the document. And that becomes problematic for me. Yes, because if you change things on what I'm working on now, when I come to class and I'm like, oh, we're doing this exercise, and then all of a sudden I'm looking at things, it's a problem. You see what I mean? But if there's specific exercises or stuff that you want from me, send me an email. I'll try and download it in a Word format and I'll share it with you. But these answers are in the back of your textbook. Yeah, paper. Then you screenshot when you do the video. No, but yeah, you have to give me a specific paper that you want. Right. Yeah, I'm not going to do it for all, so don't even think
Yeah,
about
no, it's
it.
a what? What?
No, I'm saying, like, don't ask for like whole units for
Well, no,
all of what you've done.
I would never do
You
it.
never. Okay. Super. Then you can assist each other. All right. So, question 4. I just want to do this one before we go on break because I think it won't take long. Right. So, question 4. What are they asking there? 4.1. They say journalize the transactions, including the distribution of profit above for the year ended 30 June 2021. Closing entries are not required. Okay, that's a good thing. Less stuff that you have to do. Show all your workings, round off to the nearest rand. First journal voucher number. If they tell you this, if they give you first journal voucher number, that means they want to see those voucher numbers. Okay? No journal narrations are required. Don't waste time. If you give me journal, like I get it, if you're practicing, go ahead, you can do it. But if you give me journal narrations when they said don't, there's no mark there. So you're wasting your time. Does that make sense? Okay. Here we're fighting for marks. Okay. Right. That's part 1. In my, make sure you know this, right? But I get the feeling that they might not ask the general journal version of this. I'll tell you what. In both your tests, they already asked. So they might ask it in a different form. But obviously make sure, because I don't set your papers. Remember? Just a suggestion. No, I don't. No, I don't. All of your lectures here, they don't. It happens at head office. So, huh? Head office. Either Cape Town or here, just next building. You know this is head office, the next building. Yeah. Then part B, they say calculate the closing balances of Mrs. Injira's current account, 30 June 2021. Okay, and that's 8.5 marks. So guys, here, 40 marks. 40. Guys, your paper's out of how much? 180. 180. Okay. Okay, so let's go up. Let's see what information they've given us. Okay, so here's, they've given us the following information was obtained from the records. All right, a partnership with 2 partners. Okay, all right, the financial year of the partnership ends 30 June annually. Okay, so we know our year end is 30 June. The following balances appeared 30 June 2021. Okay, there we have the capital for both partners, the current accounts for both partners, their respective balances at the beginning of the year. Okay, we've got drawings. Okay, we've got losses for the year. And then we've obviously got the profit before the distribution for the previous year. Okay, right. So, all right, cool. Now let's see what we have here. This is why I'm saying if you fail this question, I will come and look for you. Because it's never anything new. First adjustment, interest on capital must be recorded, 8% per annum, all right? And then it says Mr. Patel's contributed a further 40,000 cash on 1 April 2020. So we have to ask ourselves, 1 April 2020, is that within our financial year? Our financial year ends when? 30 June, all right? So we do need to obviously calculate interest on that. But remember, that's from 1 April. So we're calculating interest from April, May, June, 3 months on the 40,000, that is. Contributions have been correctly recorded. The contributions have been correctly recorded. So that means that this 40,000 is included in the 150 for Mr. Patel. So that means that we're going to take 150 and minus it from 40,000 to give us 110, and on that 110 we're going to calculate interest for the full year because that was his capital before 1 April. Does that make sense? Okay, so here they just thrown in a little bit of a trick there, but again we've calculated interest on capital. Interest on drawings must be charged at 10% per annum as if the drawings were taken as a lump sum 6 months prior to the financial year end. We've done this before. They just change the months. In one exercise, they say 3 months. In another exercise, they say 4 months. Here they've said 6. Nothing new there. Interest on current account must be recorded at 6% of the opening balance. Really? Is this what you're asking us? For 40 marks? Come. All right, the next one. The partners must receive the following annual salaries. They are not regarded as operating expenses. They've given us the amount. They haven't even said they receive so much every month. They've given us literally the amount. And we know that this is always going to be a reward to the partner. Okay, super. Then number 5. All right, must receive a bonus of 10% of the profit before distribution for the previous year. 10% of 100,000, 10,000. We've done. Last one. The remaining profits or losses must be shared between the partners. All right, in the ratio of their capital balances at the end of the year. Okay, so this was actually the question I was talking about. Can you see? That's slightly different. We're doing it according to their capital balances. But we know how to work with the ratios, yeah? It's nothing new. We just add the capital for the two partners. 150 plus 200 gives us 350. And then we say, okay, so for Mr. Patel, 150 divided by 350, we've got his ratio. All right. Next partner, 200 divided by 350, we've got their ratio. All right. And then you should come up with something like this. Okay, let me just zoom out a little bit. Okay, so in there you'll see for some of the calculations I've given you your final answer that you should get. Okay, right. Okay. So those are all your adjustments. All right, and then also you can see then the calculation for profit. That like how much are we actually paying out to each of the partners? Okay, and you know that's happening in the appropriation account. So there's nothing new here. Okay. All right. So that was the first bit. The second bit. Now with the second bit, we are saying what was the opening balance, guys? You guys should read this information to me. Who are we doing? For which partner are we doing this for? So 200,000 was the. No, but that's the capital opening balance. Remember? Yeah, no, it's fine. We make the mistakes here, not in the exam. Yes. What is the opening balance? The one below that. 42. Okay, so 42. Because remember, we're doing the current account. Let me zoom in. Okay, so 42,000, that's the opening balance. Okay, but that's also a debit balance. So should this be in brackets? Is it favorable or unfavorable? It's unfavorable. Okay, so this should be in brackets. Okay, then what was the interest on capital? Here we just previous. We say, okay, interest on capital. Well, we 16,000. We were rewarding her. Okay, so here, because here you see they've asked us to just do the calculation of her new current account balance. Interest on drawings, we're obviously penalizing her, so that's going to be on brackets. But let's see, interest on drawings, what did 1,500? That's how much we penalized her. So can you see why I'm saying this is it's too easy. This you should not lose marks on this one. Interest on current account. Again, we were penalizing her 2,220. Sorry, 2,520. Thank you, sir. All right. Salaries, how much did we pay her in a salary? 80,000. Okay, that's a positive. Bonus, that was 10,000. That's a positive. Drawings, this is now, guys, if they ask you for the current account for a partner, this is where they're tricking you up, right? They're checking, do you know that drawings gets closed off to the current account in partnerships? Please make sure you get that, okay? Because we don't do that in the adjustments. Because they said, do not do year-end transfers. So it's very easy for you to forget that, okay? What was the drawings there for her? 30,000 years. Okay, then the appropriation, we also calculated it. Let's see, what did we give her? It was 196,000. 96,000, how much? 645. Then to get your closing balance, it's a plus minus job. And I know you guys would not be here if you didn't know how to add and subtract. So what is the don't scare me, guys. Don't scare me. What is the final? What is the closing balance? Well, here we might as well just do it now. Or you don't want it to be a part of your video? I don't mind. I'm not writing an exam.
Okay, sorry, Belinda.
This relationship is toxic. This is a toxic relationship. 276 625. Okay, and that is a favorable balance. Okay. All right. What are you saying? What are you saying? Guys, what are we doing? What's going on? Can I trust him, guys?
No, wait. We are confirming. You see? Wait. You're confirming. They get it.
All right, so that's the total I believe you should get. All right, watching online, I did not calculate it myself, so if my students are off, it's not my doing. Right, so I think let's take a break from here. All right, we've done question 4, 5, and 6. All right, we will then kick off with question 3 once we get back from guys. Shh. All right, once we get back from the break, then start with question 3 and then work our way back to question 1.